All right, hello and welcome. This video is training for the Pro Traders Toolbox. That's my proprietary trade signal generator, and I'm pleased to say welcome. If you're a brand new listener, feel free to say hi, tell me where you're from, put it in the Q&A box. We're using that tonight. And no question or comment is off limits. Let's just go ahead and get right to work. Oh, wait, let me minimize that real quick. Okay. All right, guys, first off, I never know who's listening, so I always want to make sure that for those people that are brand new, never maybe been trading before in these markets or don't really understand yet what we need to cover to make sure that we have the best possible risk-to-reward ratio. Trading in off-exchange foreign currency transactions or cash forex, that's a risk investment. It's not suitable for all investors at all points in time. You want to carefully consider if trading in forex is right for you in light of your personal background and tolerance for risk. People can and do lose money. Unfortunately, you can lose more than you invest under certain conditions, so you want to be careful that this is the right thing for you and you're properly protected. Everything that we talk about in here today, opinions, market data, the toolbox, trade discussions, that's all opinion, and it's subject to change at any time. And now that the regulators are happy, let's get right to work. One thing I want to do real quick, please indulge me, take 2 minutes here and give me an opportunity to educate our new listeners on me personally. It's important, I think, to understand the thinking and the psychology behind the toolbox and why it functions the way it does and why it generates the signals it does, is I think to learn a little bit about me. I started trading in 1986 as a customer. I'm self-taught, self-educated. I started just like you, trying to figure this out. I did my very first trade in Chicago Board of Trade, big board corn, and I was hooked. In fact, when I found out you could make money as prices declined by being a short seller, this is what I knew I wanted to do. Man, you can make money no matter what the market does. I'm in. And I became a registered representative in 1987, and I worked in the industry for years as a Series 3 rep. I'm not currently registered. I just trade my own accounts right now and select private accounts, managed accounts. But the important thing for you to know is when I got into the business and started doing this full time, and this is the career I wanted, I lost money I got my head kicked in for years. And if there was something out there that I thought would help me do better, boy, I bought it. I must have spent, I can't tell you how much money I spent, thousands and thousands and thousands of dollars on seminars, videos, books, tapes, audio series, anything you can think of. I went across the country or the world sometimes to view educational seminars by top traders. And I lost money for years on balance. And then one day the light went on for me. I mean, and it changed my life. I became a different person. Now, I'm not saying that that's going to happen to you or that you need to go through that. If you want to know the story of how I became a net winning trader, you can pick up a copy of my 2008 release, one of the titles I have published by Wiley & Sons, The Art of the Trade. And I think you might be surprised at my point of view. But the bottom line was, when the light went on for me, I learned something about this business that changed the way I see things. And I never looked back. I still had losing weeks, losing months, occasionally a losing year. But for the most part, I had an epiphany of understanding that made things different. Now, I don't care what the market does, and I don't care who's involved. I can pull money out anytime I want. And for those of you that are interested in seeing how I do that, you can come to my regular daily Forex briefings. Details are on my website. Sign up, spend a few bucks, join me and subscribe for a month or so, and I think you'll see the difference. Now, I'm not telling you that I have the end-all and be-all to trading. What I'm saying is I learned something that most people are never taught, and that's what made all the difference. The Pro Traders Toolbox is the sum total of that knowledge put into algorithms. It's not an end-all and be-all. It's not some super secret approach. And when you look at it, when we talk about it in just a minute here, you'll see that it doesn't do what you think it might do. It does other things better than anything you'll ever see. But at the same time, you need to bring something to the table. And that's what I teach in my Psychology of Trading course and my one-on-one coaching with people. I think the important takeaway from my biography and what I learned as a trader is this. Trading is not what you think it is, and you need to adapt to that change. If you don't adapt to that change, your money is cannon fodder for guys like me. If you do adapt to that change, you're going to join the winners pretty quickly. The Toolbox is an attempt to help you see the psychology behind how this really works in a fresh way, and then give you additional tools to help you exploit that change in the market when it's there. Let's get right to work. All right. Now, if you have a comment or question, feel free. Also, my complete contact details will be available at the end of the broadcast, so just make sure you have a pen handy to write those down. Okay, some basics. The Pro Traders Toolbox runs on 4 industry-recognized platforms: Trade Navigator by Genesis Financial Technologies, Trade Station, Multicharts, and MT4. There's a couple of things about using the platform on those individual software bases that you need to know. First of all, if you're using Trade Navigator, you import the templates into Trade Navigator. I can help you with that. Also, Genesis Financial Technologies support is available. Go to their website. Here it is right here, their phone number here if you're local, or their website. If you're using TradeStation, Multicharts, or MT4, I've hired a proprietary third-party firm to create those platforms within the Toolbox, or to create the Toolbox within those platforms. So you need to download and install the files that are provided by Code for Traders. So you need to have a little bit of a relationship with them. So you want to write down that website. If you have any questions about TradeStation, Multicharts, or MT4, you contact Progster. That's his handle, his internet handle, Progster. Actually, his name is Steve Johns. He might be here tonight. Is Steve here tonight? Let me look. Sometimes he comes in, sometimes he doesn't. I don't think he is. He's not here yet if he is. Progster at codefortraders.com. All you have to do is email him and say, I'm interested in the Toolbox. He'll help you out. Or I have problems installing it, or I want to install it. He'll help you out. All you have to do. Additionally, if you're using TradeStation, use only the template designed for the currency pair selected. And I'll show you that in just a minute. Otherwise, you get some false signals. Your stops may be off if you want to use the suggested stop placement feature. Part of the Toolbox is a suggested stop. In other words, if you take a signal, where should my stop be? And it'll tell you where you should have your stop. These are wide stops, so you need to take that into consideration when executing. Also, you got to get the maximum data set from Genesis FT. The maximum data set goes back years and years and years. You want that because it is important for historical accuracy. If you don't have enough data in Trade Navigator when you're running the templates, you don't get enough signals, so you'll miss opportunities. If you're using TradeStation, you want to use the radar screen. Some of you may be familiar with the radar screen on TradeStation. Great feature. When you're running the Toolbox on that platform, it's going to help you with the issue of conflict and congruence, or what I also call confluence and congruence. It'll help you watch multiple time frames. You don't need to use the radar screen to run the Toolbox, but it's a helpful feature. On Multicharts and MT4, the back testing page creation features are very helpful. Progster has videos on his site to using some of that. I think you'll like. If you're using MT4, which is a free platform normally from your broker, MT4 has some interesting features to it that make it unique to every broker. Every broker gives you MT4 with certain things that the broker wants. Because of that, there's some flutters with the Toolbox, so you need to know what those are. And that doesn't mean that the signals are not there or that they're not valid. It means that there's certain things that you as a user have to do to make sure that the signals are always clean. So if you do that, creating templates in MT4 will save time and speed loading the Toolbox on multiple pairs. For those of you that know the MT4 platform, you probably know what I mean. Okay, regarding the signals, this is the basics, and you might want to write this down. You're looking for conflict and congruence between competing time frames. I often call that confluence and congruence. For those of you that have read my latest book that I had published, Time Compression Trading. Anybody out there read that? I mean, I'm surprised at how many people have read it that I've never heard from. I mean, I think that's a good sign. Anybody out there read Time Compression Trading? If you did, I hope you paid for it. One of the things I discovered about the internet here in the last year is that somebody has taken my books, put them into PDF format, and they're available for free. So probably I won't be writing any more books soon unless Wiley & Sons can figure out a way to protect my investment. But if you do have a copy, great. Thank you. Hope you paid for it. If you didn't, that's okay. Don't tell me. I'll still treat you fair. Anyway, multiple time frames is a key factor to understanding market structure, which I talk about in the book. And we can take some time in asking questions on that anytime you want. Oh, actually, we have a comment in here right now. Actually, a couple of, let's see, Ilya and Joe both have said they've read Time Compression. Great, thank you. What'd you think? Did you like it? Sometimes it's considered a difficult concept for a lot of people to grasp, but the purpose of the toolbox is to try to smooth over some of those issues and just give you some better points to buy or sell based on the same thinking and psychology. So I'm going to give you a few examples, and I'm going to use the toolbox running on Trade Navigator. Now, if you're using the toolbox on Trade Station, Multicharts, or MT4, your signals look slightly different. They're the same signals for the most part. Every platform has maybe a different traded high, low, or open or close, which the toolbox needs. So if you run the toolbox on several platforms at once, you might notice that one or two platforms don't get the exact same signal, but it's all basically there. One of the things is that the other platforms, TradeStation, Multicharts, MT4, use letters to show you your trade signal. On Trade Navigator, the option is to use symbols. It's up to you. If you want to buy Trade Navigator, in fact, you can go to my website and get a free trial on Trade Navigator if you want. That's in the free content section and in the Pro Traders Toolbox section. Get a free trial on Trade Navigator. See if you like the signals based on symbols. If you don't like that, or you're not real comfortable with Trade Navigator, that's okay. On the other platforms, they give you signals, but they have little letters there. It's 6 of one, half dozen the other. When we have a minute in the next couple of weeks, I usually do free training on the toolbox monthly. Proctor is going to be available. We'll be using the other platforms running the PTT. So if you want to come back, next month and look at what it's like on TradeStation or what it's like on Multicharts or something, we'll have that available. Over time, you'll get a chance to see them all. Also on his website, he's posted videos to help you with using unique features of the various platforms. Joe says, I liked it, but it will take another read to really sink in. Oh, okay. Yeah, people tell me that all the time about time compression, that although some people have said that it's an eloquent look, but I don't get it, and other people have said I got to read it a few more times to really let it sink in. Other people have said I just don't get it. So I don't know if I communicated the issue of time compression and multiple time frames as well as I could have. Perhaps we'll have an opportunity to take the content and do a series of webinars on it where you can actually ask questions. So that's something you might want to just kind of keep in the back of your mind. And that's why I would always suggest that you join my mailing list, because when I send stuff out on email or over the web, it's stuff that I think is important. I'm not going to spam you. If it's stuff that's important, it's stuff I'm doing. If you like it, great. If you don't, that's okay. But I would watch your inbox, because we're going to most likely do a webinar series on time compression as time goes on. Okay, let's go ahead and have a look at, Joe says that would be awesome. Good. Well, we got one listener anyway. That's good news. All right, let's move this over here, and I'll watch that. I'm going to go ahead and switch to, let's move this to here. I'm going to switch to Trade Navigator. Now, you got to help me out here, guys. Let me know when you can see this chart. This should be a chart of Euro USD. Let me know when you can see that. Okay, a couple of yeses coming in. Good. All right, now, as you can see on the platform, we have some symbols on the chart. And I'm going to go ahead and move all this to where I can get a clear view of the chart itself. Okay, now, on this particular chart, you can see that I've also added things that are unique to my use, and also the signals from the Pro Traders Toolbox. You see these little green signals, blue signal over here, we'll get to that in a minute, and some red signals. Green means opportunity to buy. There's two kinds of opportunity to buy. There are trend signals. In other words, if you're looking for a trend to continue or a place to buy with the trend upward, the green signals that are posted here as pyramids are trend buys. We'll also take a look at strong trend buys, which are green boxes. On the other platforms, they are capital T's and small t's. If there is a reversal brewing, you'll also see that, and you'll see three kinds of reversals on Trade Navigator. You'll see three kinds of reversals on the other platforms as well. H reversal, which is a hook reversal, X reversal, which is an exponential reversal, and exhaustion reversals, which are on this platform blue diamonds, but on the other platforms is a green E. E for exhaustion. The reversal signals have varying degrees of accuracy. The reversal patterns, the H reversals, tend to be tested. X reversals are more valuable and more accurate over time. The blue diamond or exhaustion reversals are the most valuable, least seen, but most accurate. In other words, if you see an exhaustion reversal, that is a very good clue that that market has bottomed or set to change hard against the prevailing trend. In the event of a blue diamond below the market, of course, that's a buy. Here's one here in euro on the 60-minute. Euro at this point was, what, 32 handle, maybe a little below. And as you see, we were clustering with reversal patterns leading up to the diamond, one more after it, one more test that was rejected, and then the uptrend for the past 6 or so trading days resulted. It's important to note that these signals appear on every time frame. They're not just for a particular time frame. They're always there. And this is the issue of confluence and congruency. Oh, we got a question here from Enrique. Hold on a minute. Let's have a look at what he said here. He says, so is this toolbox different from the one you presented a while ago? Actually, the answer to that would be yes and no. It's the same basic psychology behind it. However, some of the signals have been fine-tuned. And that means that we've done a little bit more homework on how they're presented, where the stops go, and what we feel is their accuracy. The basic concept is the same. The basic concept is the loser is on the wrong side. The loser is going to lose. This is a great place to take the other side of his trade. That's the basic concept. The blue diamond or exhaustion reversal is rare, but it's the most accurate. H and X reversals are very good signals. H's tend to be tested, and sometimes you need to see them cluster. In other words, when they cluster, like this H or this X, a couple of H's together, this says that something is changing right about here. That blue diamond says it's starting to happen right now. These little green dots underneath are the stops. So if you tried to buy, if you were very aggressive and you bought the first signal, you may have been taken out of the loss. By the next signal, that one may have worked nicely for you, right? Trend signals, the inverted pyramid is a trend sell. The red diamond is a strong trend sell. A strong trend sell means something tried to violate the trend and failed at that moment. Now that doesn't mean that it's going to be forever. As you can see, these strong trend cells here, really, they made you work for it. There was a little bit of a lead, but for the most part, you were taking heat. So these strong trends, you know, these really didn't work. This one here didn't work at all. And here's your suggested stop. It took you some time. You maybe come close to a break even or a small loss, but for the most part, on this particular time frame, the trend sell strong trend cell were in conflict with the stronger buy signal over here. As you can see, the trend cells began to go away, and we began to see reversal cells before more trend buys were in place that actually worked the best. This is very common in the toolbox. When you get reversal signals, that means that trend might be ready to end. So be cautious. If you're going to go with the trend, wait. Wait for the trend cell or the strong trend cell, depending on your tolerance for risk, and be ready and nimble to exit. If you're going to go with reversal patterns against what might be a new developing trend, which in this case would be this reversal here, it's important to note that you still have to have the seller come in, and if that guy doesn't show up, you lose. That's what this little blue box is for. The blue box says a negation. The blue box means something isn't right with that signal. That doesn't mean that the signal wouldn't work. It means there's a lot of question about it that may not be working. The idea behind the toolbox is that when you have identified a change in the order flow, when the toolbox is set, there's something about what's happening in the market right now that says a change in the order flow is coming that needs to show up right now. Right now, I define as 3 bars to 6 bars. So if you get a strong trend sell and you take it on the bar, by the 3rd bar it needs to be working. That's a good clue that that trade's going to work. If by the 6th or the 8th bar it's not working, might be time to consider liquidating. Additionally, if that signal is not necessarily valid, you'll get a blue box right away, usually within the first few bars. So if you get an X reversal here, this says, look, this minor uptrend is about over, and this market's ready to break to new lows. You put your short on, and then you get an immediate blue box. You might want to take it off. Now notice where the stops are in this case. You see how the toolbox gave you enough of a lead to decide what you wanted to do, and you had a little bit of time to decide that. Over here, it said you might want to do that now. If you took it off now, well, you would have had to wait another day to get stopped out, but why would you want to be in a trade that didn't have a lot of potential at that point? So using the signals has to do with common sense, in my opinion. You want to be able to understand what it's trying to tell you and how long it takes for that to show up. If it doesn't show up within 3 to 6 bars, my opinion would be that that assessment, that signal isn't got a lot of potential anymore. That doesn't mean that it can't work. It means that it might take a lot more time and a lot more effort than you want to give it. When you're going with reversal patterns and the market begins to take money out of the pockets of the other side, you want to add to that position. This is a great place to work with the other side now. Now you've got reversal patterns that are high quality. You've got clusters and maybe an exhaustion reversal. Market's starting to move higher. The sells aren't really working, right? The next buy signal that you get for the developing uptrend, you want to add to your position on. If you notice, we have an H reversal here on, I think, late in the day on Monday. That gave you a nice lead, about 100 points, but you had to work for it. And then we had more buys that worked tonight. And then overnight, we have another H reversal here early in the morning that's starting to show up. Maybe it's going to show up. The important issue here is that if this uptrend is secure, then maybe you might want to stay long. But the H reversals, or we're going to find out, I'm sure, in the next few bars, X's and H's over here, that may mean that it's time to consider cutting back or liquidating some of your longs. Not necessarily that you want to go short here, but that it's a place to consider being careful if you're long. If you want to short it using the reversal patterns, there's going to be plenty of times when the market gives you a slam dunk and it makes a ton of money the other way as the overall larger trend develops. But that is an issue of multiple time frames. So let's go to the 120, which is the 2-hour chart. And let's take a look at some of the signals in the last 2 weeks on a 2-hour chart. We just look at the left side here. X reversal says, okay, resistance came into play here. This market's got some potential to the downside. I have one trader that trades only the X reversals. He goes short on red X's, he buys back, reverses, and goes long on the green X's. That's all he does. He ignores every other signal. On a higher time frame, that can be a lot more lucrative. Here's a buy signal, a reversal signal developing on the low on the 3rd. Now, when we talk about conflict and congruence, this is really important. As the higher time frames become congruent, they have more credibility in that direction. So we have an X reversal on the 2-hour chart. On the 60-minute chart, same time frame, right here on the 3rd, we have reversal patterns developing. So we have the 60-minute saying there's a reversal starting to happen. On the 2-hour chart, it's saying it's starting to happen. And if we look up to the 3-hour chart, nothing right at that point, but we had some a little earlier. We look at the 240 chart, nothing at that actual price level. The daily chart, nothing at that actual price level. See? So although it was a great signal, in hindsight, you needed to have a little bit of confidence to take it and wait. You had a 60-minute, you had a 120-minute that showed potential. If we look at the 90-minute, which is an hour and a half, same thing. H reversal a little bit early. Again, the H reversals are often tested. It said maybe it's no good. Down here, we had just a little bit of support come in, and the market started to rally. And again, on the 90-minute, right on the close on Friday, buy would have been real helpful to add to it. I think on the 120 we had a buy signal about that time too. No, we had losing sell signals. The 3rd bar in, this signal didn't work. 3rd bar in, this one wasn't working. 3rd bar in, this one wasn't working. 3rd bar in, it was actually negated on the 2nd bar. So it's basically telling you that the selling pressure might be over. Additionally, one thing that can be very helpful when using the trend sells or the strong trend sells is the distance, where the bar closes relative to the signal. If it's a down signal, like in other words it says you got to sell here, look at where the close is. If the close is it's still an up bar, it's a less reliable signal. Here's a doji. Gave you a little bit of a lead on the next bar, but nothing by the 3rd bar. Here's an up bar. Maybe you would ignore that. Up bar. Maybe you'd ignore that. In other words, your sell signals on the 120 weren't really there. It looks like the X was really working. We go back to the 60-minute, we can see the same sort of thing. If you come over here to the strong trend sell, the signal came on, but the bar was an up bar. It was a positive bar. The next signal came on. It was a neutral bar, but you had nothing within 2 or 3 bars. This really didn't look like it was going to work. If you would have waited, maybe you got something, but it looks more like it wants to go with the trend. On the trend signals, you want to go with the trend. So here's a down bar for a buy signal. Maybe you want to wait a little bit. Now we've got an up bar with a buy signal. That one worked really well. Down bar with a buy signal, not quite there. Up bar with a buy signal, that one would have worked. You see what I'm saying? The idea here is that when you're using the trend signals, if the bar closes in the direction of the trend signal, that's a better clue. If it doesn't, you might want to wait. Reversal patterns tend to cluster. When reversal patterns don't cluster, they tend to be tested. Like in this case, this H here, this H here. And if we go up to the daily chart on the euro, you can see that on a larger time frame, you don't get a lot of signals on a large time frame. Like on a daily time frame, you only got a handful of signals for the whole year. Most of them didn't really work. Maybe you would go with the strong trend sells over here, and these run up bars. So the daily signal really didn't help very much in this case. You go up to the weekly time frame. These tend to be more aggressive and tend to be more accurate. If we look over here on the 2008 weekly time frame, we had an H reversal cluster with a blue diamond reversal. Now, this one took some effort. We topped every month for 3 months, 4 months, before finally breaking south, and any buy signals were just not working, maybe for a week or two. Sell signals, again, not really working. And then, of course, nothing really at the bottom on the weekly or on the monthly, or the weekly over here on the sell signal. So you have to be careful with when you use them. But when they're there, it means something is changing. Stay vigilant and wait. Let's go back to the 60-minute here. Now, this is Euro. If you guys want to look at another pair, we can do that. Here we have a Euro. What do we have here? 9/11. What are we on a 60-minute time frame for Euro? But we're way back to 9/11/11. So we go back a month. Here's a blue diamond. Took no heat on it, and it worked nicely. Several hundred handles. You can see the sell signal's just not working. So that's your clue. Sell signals over here were working, partly because they were down bars, right? Another clue is that when the signal comes on and the close of the bar is on the signal side of the averages, that's a better clue. When the close is on the non-signal side of the bar, like here we have a sell signal with an up bar that closes over the 50-bar moving average, less reliable, right? If we look at, well, we got to go all the way back here. And we can look at other pairs if you want. And here we are, today's current action. Now, for those of you that are interested in understanding how I use the toolbox, I went ahead and shorted Euro today at 37.70. I've got right about it even right now. I sold it on this H reversal. And the reason being is that the speed of this move reached previous support and resistance on a weekly time frame. That's congruence. So when you look at the larger time frames, the 90-minute, 120, 180, 240, daily, weekly, monthly, what you're looking for is the same signal somewhere close to the area that the other time frames have. So if you have an H reversal on the 60-minute and you go to the 120, you want to look for an H reversal that's fairly close one side or the other. If you want to look for higher time frames, the more time frames that have that signal involved, the more likely the market will be moving in that direction. And to kind of help you out here, I'm going to go to gold. Now, one thing I want to mention to you is that the toolbox is designed to work in foreign exchange. That's why I developed it. However, going through back testing, it works beautifully in other markets. Sometimes you have to kind of play with it a little bit, but it will give you very good signals in equities, indices, and futures. So here's gold. This is a 60-minute time frame for gold. Let's go to the daily time frame. And let me show you the reversal potential that we had. Now you'll notice that as the market made all-time highs starting in the month of July, this is on a daily time frame. We didn't have any help here. It didn't really happen. But once we reached this all-time high, you could see that something was starting to change. And the market indeed did give you, if you would have used the XH reversal here in August, second one in August, the first handful would not have really worked in July and August. But as we made these all-time exhaustion highs, we started to see gold up at levels that made excellent shorts, and you would have had an opportunity, nice opportunity. Now it's saying, well, on a daily time frame, you might want to be long, and that's fine. But the important issue here is what do we have in terms of buying signals? These are down bars on the buy side, not as strong a signal. Weekly time frame, this is what I thought was really interesting. And by the way, I recommended shorting gold to those customers that asked back in August. We have a clustered blue diamond or exhaustion reversal clustered with an H reversal and an X reversal all within 3 weeks of each other. This is a market that said, we're done. On a monthly time frame, we also had a reversal signal. So you have weekly, daily, and monthly time frames all saying the same thing. Very strong potential there. And in fact, you'd have about 300 or 400 point lead on it. In my opinion, that's what you're looking for. Now, these other signals didn't work so well, right? Buy signal on a monthly time frame right here did work very well. And of course, as you remember, when gold was crashing in '08, it went from 1,000 to an ounce to down under 800. What was the news? This market's all over. It's never going to come back. You need to liquidate. Toolbox said, well, maybe you might want to consider getting long in there somewhere. On a monthly time frame would have worked nicely, but now you've got selling coming in here. You need to be cautious. So if you're long and still holding long gold based on the longest time frame you can look at, you'd be cautious right now. It doesn't mean to be out. You'd be cautious. But does your account really want to handle a $400 an ounce volatility? That's up to you. We look on a 60-minute time frame. We've got some good buy signals coming in, and we got some sell signals coming in that just aren't working. Buy signals seem to be working. Reversal patterns not quite as accurate, but giving you a lead. And if you've got short on some of these clusters, a better opportunity maybe to just wait, because these are coming on down bars, these buy signals. If you want to look on things like a 15-minute time frame or a 5-minute time frame, you're still going to get signals, and a lot of them are very accurate for that time frame. You got to remember, though, that when you're working on these time frames, your potential for gain is a lot smaller, and the distance you're going to run is a lot smaller. So if you use these buy signals on a 5-minute time frame, what you're going to see here for a move, we're talking about 30 minutes here, and it might only be $6 or $8 in this pair, or in this case, gold. You know what I'm saying? This is the issue of conflict and congruence, and this is where I'll go ahead and open the floor up to questions or comments if you want. On the lower time frames, you want to see buy signals on 5-minute, 10-minute, 7-minute, 15-minute, 30-minute, right in the area that you see sell signals on the 60-minute, 2-hour, 3-hour time frame. Example being, if we go ahead and let's draw a box around these buy signals in gold right here. Let's say you say, well, I want to look to make some money in gold. I'm going to go on the buy side short term. This area here would be a buy zone. You got buy signals coming in that may give you a little bit of a help here. If we look at the 60-minute, notice that that is actually close to a top near term. Now, there's no signal on the 60-minute, but if we go to the 30-minute, we're starting to see signals start early. If we go to the 120, I think that box is basically right there. See the X reversal on the 120. Now, what that means is the X reversal is saying on a big time frame, sellers are coming in. On a 5-minute time frame, you've got buy signals coming in. So the 5-minute time frame is in conflict with the larger 2-hour time frame. Most likely, the 2-hour time frame would control the market at that point. And I'm not saying that the market wouldn't rally away. What I'm saying is if you were looking for a place to get short gold and you were using the 2-hour time frame to find it, you had an opportunity right there today at 1687 and change on futures. Now, if that's truly a short, in the next 3 to 8 bars, we should see a nice move lower. One of the clues that says we could have an opportunity developing here is the fact that where that sell signal occurred on a larger time frame, it coincided with buy signals on a shorter time frame. And here's a 15-minute. Just outside that envelope, buy signals are starting to come in. See that? So what you're looking for is conflict and congruence. Confluence and conflict means that the smaller time frame is seeing something that's opposite what the larger time frame might be seeing. And the larger time frame typically controls the market and is traded by professionals. One of the things that I've learned in my years of trading is that the winning trader, the guy that pulls consistent money out of the market, tends to be on a time frame of 1 hour or more. The losing trader, the guy that is consistently having his equity beat up and drawing down consistently, tends to be working on a time frame of an hour or less. That means if you're a day trader and for the past 6 months your account's just steadily getting ground down lower, are you using a 5-minute or a 7-minute or a 3-minute or a 15-minute chart to buy or sell? When you do, take the point where the 15-minute, the 5-minute, the 7-minute, the 10-minute, wherever that says to go long, immediately go to the 60-minute, the 2-hour, the 3-hour, the 4-hour, and see if that says go short. If that says go short, most likely the small time frame guy is going to get eaten for lunch. And so you don't want to go long there, you want to go short there. Ilya says, I got to go. We'll see you tomorrow. No worries. Thanks. And guys, that would basically be our initial discussion on confluence and congruence, as well as understanding the signals and how they work. The important thing to remember about the signals, and let me go back to my PowerPoint. Let's move this to here. The most accurate, this is what you need to remember about using the toolbox initially. The most accurate trend signals, in other words, if you want to go with the trend, the most accurate trend signals are clusters and stacked signals. I didn't get a chance to show you some stacked signals. I had one or two on there, but what that means is that the same bar has a strong trend and a trend buy or sell. That's a stacked signal. So if you see a stacked signal along with a cluster of 2 or 3 other signals around it, that's more accurate. The most beneficial reversals are the exponentials, or the X reversals. The blue diamonds, or the E reversals, are rare. You don't see them that often. And when you do, they're really important. You need to go with them. You need to find a way to use that signal to your advantage. H reversals are very common, and they're usually almost always tested. So if you get an H reversal on a pair, and you think we're heading down to some support level and you see an H, you might want to wait another handful of bars and see if you get another H along with it, or an HX, or an HX blue diamond together, or an HXE. That may mean that you're in better position. So oftentimes that first H isn't the signal, but it says something's starting to change. You wait for a couple of more to come in, and you're good to go. You are always looking for higher time frames to have a similar signal when comparing to your execution time frame. In other words, if you're working on the hourly chart and you see a signal, that's great. Go up the 90-minute, 120, 180, 240, daily, weekly, monthly, and see if there's a signal that comes on in the same direction somewhere in there. If you get 2 or 3 congruent signals on higher time frames, that tends to be very reliable. The longer the time frame, the more time you have to wait. So like I showed you in gold, if you get a reversal that's on a weekly and a monthly, you might have to wait 3 weeks for that to hatch. You have plenty of time. So maybe what you might want to do is, instead of putting your whole position out, put out half. You know, if you're normally a 5-lot trader, put out 2 or 3 and wait 3 weeks. Run a stop outside the range. And if you use the suggested stops that the toolbox generates as well, that's going to give you a little bit more breathing room, right? On the lower time frames, you're looking for those to show opposite signals near or around your execution time frame. So as I showed you in gold, you might want to go short because you're getting signals on the larger time frames. A good confirm on that trade would be buy signals right in the area, on that same area in price and the same area in time, on a 5-minute, 10-minute, 15-minute, or a 30-minute. The important thing, I think, is to use common sense and trade experience when you're using the PTT signals. It's a guideline for underlying the type of market structure that's in play, and the PTT is attempting to isolate changing psychology or consistent psychology. If the trade is good to go for a trend, the trend signals show you that the psychology is consistent. If you get 2 or 3 or 4 bars into that signal and it's not working, then something is changing. You want to wait for that. If something is changing, that's what the reversals are all about. You got to give it a little room to maneuver, but once the signal comes on, they're very accurate. Some of the most accurate signals are the X to X on a high time frame. In other words, you buy the green X's when you see them, and you just wait for a red X, close and reverse. Those can be very accurate over time, but you have to be using the larger time frames to do that. And of course, the way I always suggest that you begin your analysis, always remember that the way the PTT is thinking, it's not thinking about finding a trade for you. It's thinking about, this is what the market looks like to the other guy, time to go the other way. In other words, where is the loser? See, what I teach in my Psychology of Trading course, what I teach in my one-on-one coaching, is that analysis of the market is really not about finding a trade for you. Analysis of the market is really about understanding how the loser is using all of this so that he'll put himself at risk. In other words, if the market is in a serious uptrend, at some point that's going to end. And where that's going to end is when the late buyer comes to the table. When the loser is finally convinced that this trend is secure, he's going to go long. When he does that, most of the time the market breaks lower, forcing him out. So the signal to sell, which is a reversal, the X, the H, or the E reversal, the blue diamond, that's an attempt to identify at what point that loser is probably going to come in on the buy side. So therefore, you need to sell. When the trend signals come on, that's basically trying to identify a place where the consistency in the underlying psychology is late. Meaning, if the market's starting to break lower against trend, that's the place to buy against the late short. You follow me? If it's rallying against trend, that's the place to sell against the late long. Where is the loser? So if you buy the toolbox and you say, okay, I'm going to use it and learn how these signals work, you could initially get confused because you think it's about telling you where to go long or short, when in reality it's really trying to tell you where the loser is probably getting positioned on the wrong side. So the next few bars really tell you if that signal is accurate. So when you say, okay, I'm going to go along with the trend, I'm going to wait for a sell-off, and the signal comes on to go with the trend, buy the trend, either a strong trend or a regular trend buy, what that really means is this is probably where the seller is coming in thinking that the trend is over. So what you need to do is you need 2 or 3 or 4 bars to see if he's disappointed, and then his buying back his losing short is what drives the market higher. Of course, creating trend. That's really the issue. Where is the loser? And that's what I teach all the time. And of course, we can take more time on that if you want to. And we have time for Q&A. We've got a few minutes left. For you guys that are brand new, thanks for coming. I want you to follow me on Twitter. This is really important. I place trades in when the toolbox gives me a signal, and I've done what I think is my homework I need to do, and I put it out there. That trade is live. That's trades that I'm working in my own accounts, and I think that's important for you to know that. So follow me on Twitter. Over time, if you do that and come to my daily Forex briefings, in a month or two, you'll begin to get the psychology down really well. And if you're using the toolbox to help you, I'd be more than happy to assist you with what it's trying to tell you. One-on-one coaching, it's always available. Just ask. I got managed accounts for select clients. I got a handful of spots still open if you're interested. And also on Friday, just for you to know, for those of you that are maybe going to be around for the next few days, I'm doing a guest speaker broadcast at Traders Log. The details are on my site. We're covering the 5 fundamentals, the 5 driving fundamentals of Forex, and you're welcome to come. So here's my contact information. Feel free to write it down. My email, website, phone number. I'm still the only guy that answers his own phone in this business. Skype if you're overseas. Twitter, my YouTube channel. I post all this stuff on YouTube. You can follow me on Facebook and LinkedIn if you want. You want to copy the toolbox, ask Progster at Code for Traders if you're using TradeStation, Multicharts, MT4. If you're using Trade Navigator, use the Contact Me form on my website, and I'll get with you and hook you up on that. I have to create it for Trade Navigator. Progster handles the rest of those. And one last thing that people are finding really interesting, my first book, Trading Rules That Work, I'm doing a video series. In other words, we're covering all the trading rules. It's a 30-video series, and I'm posting 2 installments every week on my website. Just go to the homepage, and they're there. They're free for right now, so you might want to go ahead and just make a note to come back every week and look at the next couple of videos. They're there for free until I take them down, so you're welcome. Jerry says, just got back home. I have a question. If I have a TradeStation account, can I link it to Trade Navigator? You know, that's a really good question. I don't know what that involves or what that means because I'm not a programmer. I don't think you can. I'm not sure. I think that would be a connection between Trade Navigator and TradeStation. I don't know. I think that TradeStation has a competing software to Trade Navigator, and I think if you open a TradeStation account, you're supposed to just use their software. I don't know if Trade Navigator has a connection there where they say, okay, I'm using Trade Navigator. I want to click on the chart and have that trade go into my TradeStation account. I don't know. Why don't you take a minute tomorrow or tonight, email me. I'll put that in the queue for tomorrow, and we'll get on the horn with Pete and the guys at Trade Navigator and find out if that'll work. I don't know if it will, but if it does, then we're good to go. We'll try. If not, then if you have TradeStation, you're using TradeStation now, the Toolbox will run on TradeStation. In fact, TradeStation's got a couple of features that Navigator doesn't have, so that might be of interest to you. Todd's got a question. Can I ask a question? He says, is it true that you are the ghostwriter for the Mysterious Trader X and his Dancing with Lions book? Okay, Todd, the answer is yes, I'm Trader X. I'm not the ghostwriter, I'm Trader X. And if you read Dancing with Lions, The Art of the Trade is the abridged and sanitized version of that book that Wiley wanted to produce. I didn't know there was anybody out there that still read Dancing with Lions or had a copy. I think a total of 2,412 books, I think, were sold for Dancing with Lions. So you have something that is unique. And yes, I'm Trader X. I'm not managing. I'm not in the business like I was when I wrote Dancing with Lions. So I'm not as concerned with being anonymous, and I don't really care anymore. But since I'm not anonymous anymore, yeah, I'm the guy. Jerry says, thanks, I'm a programmer. I may find that out later. Yes, you may. Let's see. Joe says, can you briefly explain late day trader market structure you referred to on Twitter? Yeah, absolutely. Okay, here's the simplest way to describe it. Why is a day trader a day trader? He's a day trader because at the end of the day, no matter what happened in his account, he's going to be flat. In this guy's mind, he thinks that reduces his risk. I'm flat overnight, so I don't have to wake up in the morning and be on the wrong side. To which my answer is, if you understand how the market is structured and you're on the right side, why wouldn't you want to wake up with another 200 points? But let's suppose that the guy doesn't have that thinking yet, and he is in the market to liquidate by the close, because that's what a day trader does. They're out by the close. And this is where the toolbox can be really helpful, because if the day trader decides that he's got what he needs to go long sometime during the day, what does that mean? Well, that means there is going to be a sell order active in that market by the close. He's going to get out by the close. So if he's long and the market isn't working by the close, there's going to be a slew of market on close orders, right? These are all the day traders that didn't make any money today, so they got to be out by the close because that reduces their risk, right? So that market now is preordained to have selling pressure in it on the close. So if the late day trader went long, which in my opinion, that's what they did in euro and pounds, they went long ahead of the close, at the end of the day, you'll notice that markets started to come off a little bit. Now that's normal, and that doesn't necessarily mean that the trade is over to the upside. I went short because I believe that that guy's in. He's going to liquidate. So he's out now. Now we've got Asia starting, and what's Asia going to do? The day trader in Asia is going to buy. And if he isn't happy, sell by the end of the day. So if that market grinds sideways to lower, if euro and pounds both grind sideways to lower, most likely the late day trader who's buying, why would he be buying? Because in his mind, it's a trend. He buys, he buys the trend. And the trend on a 15-minute time frame looks like this market is going to the moon, Alice, right? So at some point, he's going to be wrong. And when he's wrong, he's got to take his lumps. So if that's the structure of the market, then every buyer on a daily time frame or less, a day trader, 5-minute, 10-minute, 15-minute, 30-minute trader, those guys, they're going to have to sell because that's what defines them. They define themselves as a day trader, which means if I buy in the morning, I got to be flat at the end of the day because that reduces my risk. So that means they'll sell. If that is the case, then that guy is probably preordained to push that market lower over the next few days as they keep trying to buy what they believe to be a resumption of trend. And if the high for the week in pounds and euro is already in, then most likely those guys are going to be disappointed for the next 3 or 4 trading sessions: Asia, Europe, New York tomorrow, Asia, Europe, and New York Friday. If that's the case, we'll see that market sell off. The volume on down bars should be higher than volume on up bars. And that basically means that the up bars don't have any interest. The down bars, people are getting out. Most likely that means that that setup is going to be late buyer. Does that make sense? Jerry says, another question, I'm new to Forex. What's the main difference between futures trading and Forex trading as you think? Well, they're the same market. The futures is a derivative on the same market. So the main difference between cash Forex and futures is that futures is a set contract amount that's traded under the authority of an exchange. So there's different people involved, different size commitments involved, and different size margins involved. But it's the same market. Futures is never going to move appreciably different than cash is going to move. In fact, no cash market and futures market ever moves differently. So futures is just a different way of exploiting the same setup and structure. It's a different quality of participant, but for the most part, it's the same market. So if you're using futures, there's just some differences about futures that you have access to. Like you'll be able to know more about things like volume and open interest. You'll be able to understand more about margin requirements and day trading, because a lot of futures traders are day traders. And of course, all this happens under the authority of an exchange, and so the financial requirements are slightly different. But in the long run, it's the same market. It doesn't matter. You know, that's my opinion. Some people argue that, but I definitely believe that to be the case. The same market. Okay. Great questions, though. Jerry says, got it. Good. Okay, we got a few more minutes here if you want. I'm looking at the clock. We got a minute or two if you guys want to take a second. I hate having dead air time, but that's where it's at. Has everybody got my contact information that wants it? You guys good to go there? Now, I would suggest that you take a look at my website. Now, bear in mind, guys, I'm a trader. I'm not a broadcaster, and I'm not a website guy. So if you're not finding what you want, or you got questions and you can't get them answered by the broadcast or by cruising my site, pick up the phone and call me or email me or Skype me. You know, I absolutely promise you I'll take the time that you want. Like I said, I'm still the only guy in this business that answers his own phone. You know, I just really believe that that's important. So since I've spent a portion of my career in the process of education now and training for as long as that lasts, then I want you to know that I have an open door to you. So if you want to do that, feel free. We have a minute if you guys want to take another second or two. We good to go, or you guys want to split? I know it's 7 o'clock Eastern, so some of you guys want to get out of here, maybe have a bite to eat. Don't blame you. Some of you guys overseas, it's a long day. Thank you for spending a few extra minutes. Peter says, shows you still have a conscience. Well, if you read The Art of the Trade, or in the case Todd reminded us, Dancing with Lions, if you can find a copy, that's one of the key themes of my education and development as a trader, is that I had a real strong sense of value, and that never went away. And when I got into this business, it was very hard for me to accept that things were different than I really thought they would be. You know, things should be a certain way, and I think we would all agree with that under certain conditions. You know, it's men always argue and debate about how many wives they can have, but they're pretty much in agreement that you can't have somebody else's wife, right? That issue of what is right and what is proper and what should be, that's open to debate at a certain level, but at a bedrock level, no, it's not debatable. There are moral absolutes, and we need to adapt to them. And I think that if everybody in the business of trading were to adhere to maybe a different or better quality, moral conscience, trading would be a lot different than it is today. But they're not going to do that. And the reason they're not going to do that is because people are basically idiots. And until, we as individuals choose to join a higher thought process, we're the idiots. So as long as they're trading, I'm no problem taking their money. And when they finally decide, you know what, I'm done getting my head beat in, what am I doing wrong? Hey, you want to learn how this is done? I'll be more than happy to show you what I've learned. It might make a difference. If it doesn't make a difference, fine. That's okay. If it does, I'm real happy about that. And that is why I hold myself to the standard that I do, because I think this business could be done tremendously different. And I think anyone can learn to trade, and I think anyone can make themselves wealthy doing this. Because I was not the sharpest tool in the shed when I got started. I learned this. I had a major life change. It changed me. In fact, people that meet me today that knew me back when I was an asshole, they don't know they don't believe it's the same guy. They've actually said that to me. What happened to you? You're a different guy. Well, that's a side benefit. I didn't know that this change would happen to me that benefited me in a lot of areas of my life that I didn't expect it to. Part of that is because I just would not compromise on what I thought was the right thing. And the other part of that is I just would not compromise on getting the knowledge that I needed to win. What I learned is that knowledge is always available. It's available to anyone, anytime they want. The problem is that they have a hard time appropriating it. They really don't believe things are the way they are. It's hard for some people to understand that. They really, I've talked to a lot of guys that say, I can't do that. I don't believe that's the way the markets are. I said, well, look, this is a game of beat them up and take their money. This is what this is. So every time you win in your account, there's some guy out there that's not going to make his car payment. That's not going to be able to put his kid through school. You're telling me you can't handle that? Well, then this isn't for you. But that's really what I discovered, and that's the way it is. So if you want to win, you want to find the loser and take his money. If you can't handle that thinking, then this business isn't for you, in my opinion. The Pro Trader's Toolbox is designed to help you appropriate the thinking required to win. Pete says it was good. Okay. Why are you in education as well as trading? Great question, John. Simple answer is because it helps me pay the bills. Some of you guys aren't real familiar with me as an individual, haven't spent enough time with me to know, what my personal life is like. But your personal life will affect your ability to trade. Everybody out there has had an experience where something happened in their life, and at that moment, for years after that, they couldn't function, right? In trading, that edge is even sharper. I've been trading now. I got into trading in order to win and learn how to make money, and I did really well. Made and lost several fortunes as time went on, and kept a lot of it. And then 9/11 happened, and my bank was in the building, gone. All my money gone. Everybody's money gone. No records, nothing, gone. Thank you for playing. You have some lovely parting gifts and the home version of our game. Thank you. Goodbye. That was it. So my net worth disappeared overnight. It took me a few years to figure out what I was going to do. When I did do it, lots of people loved what I had to say because I'd been through what I'd been through, and they paid me for that. Right? So I discovered that there was opportunity to educate people, that there was a need for that, and I've been doing that ever since. It's not something that I want to do for the rest of my life. I don't know how long I'll do this, but you're welcome to take advantage of all the education I can offer if it'll work for you until that changes. I'm all about getting the equity that I need to do what I want to do the way I want to do it. Isn't that why you're in this business? But my life went the way it did and took the turns it did, and I got sick this year. Horrible illness and an accident. On top of that, I broke 5 ribs and almost died. It costs a lot of money to not be, going into the light on an operating table. So my life is what it is, and the benefits that I have, it just went out the way it did. So I educate and teach, because this is where I have opportunity right now. That will change at some point. When it does, you'll never see me again. So I hope you won't wait until that happens, because I do think I have a lot of benefit to those people that really want to think this through and really want to learn. Because I'm telling you, you are not going to win. You are not going to win at this game. It is not going to happen until you change your thought process to be, I look for the loser. If you don't do that, you have no chance. Not going to happen. The whole point of the toolbox is to give you a little bit more of an edge into that thinking. But if you're not going to accept that thinking, I'm going to figure this out some other way, I'm going to study John Bollinger, I'm going to use MACD, blah, blah, blah. You have no chance. It's not going to happen. You might as well take your money and put it in a little stack out in the backyard and tear it up and burn it, because that's about all that's going to happen. The guys that make the real money in this field, they think like I think, and they don't pretend to be anything other than that. So this is your opportunity to hear what the insiders and what the winners, what they focus on, because that's not going to change. It's a zero-sum game, man. You can't do it any other way. The only way you get paid is if a loser takes his loss. That's never been any different. This business has been around for 160 years now, and it's never been any different and never will be any different. So you have to be willing to take that point of view and exploit it. If you do, great. If you're okay with that, great. If you're not, it isn't for you. Peter says, then we can assume you're a long-term trader. Yes. Yeah, those trades are always better. I tend to be a longer-term trader. When I put something on today, my point of view is I'm hoping to hold that forever. Doesn't always work that way. Not too many trades do that. For those of you that follow me along in June and July, when I had a handful of opportunities to talk to people when I was recovering, I bought dollar Swiss 72.50. Okay. That trade's off now. I have a nice profit on it in my account. Everything's cool. When I bought it, didn't have any clue that that was going to go to the 90 handle. Right? But it did. I was smart enough to hold for a lot of that. Didn't get it all. That's not the point. The point is, when that market did what it did down into that low print, there was an opportunity, a huge opportunity. Why? Market can't go down forever. It can't. It's physically impossible. It was exhausted. How did we know that? Huge volume with a rally back to close, better on the week, better on the month. That is not sellers. That's buyers saying, you know what, this is done. That's it. That psychology changed. Everybody that shorted it from that moment forward was cannon fodder. Those trades come along, there's 3 or 4 of them every year. What if you just used your education, knowledge, and discipline to look for those kind of trades and let everything else go and put on 3 or 4 home runs a year? Where would you be in 4 or 5 years? You know what I'm saying? That's the opportunity base that the markets provide you. Now, are we good enough to do that? Can we maintain our focus? Can we stay sharp? That's the psychology behind this, and that's where the work is. Not everyone can do it, and even the best of us can't do it all the time. See, the market is a cauldron for purification of character and commitment. If you're willing to make that choice, then you're going to do really well. And you can learn to do that. but you might have to let go of some of the thinking that led you to that point. You might have to change your point of view. You might have to change the trade size you're working on. You might have to change your time frame. All that takes time, effort, and work to go through your head. That's how, I've had plenty of guys that, like, they got it. Oh my God, I get it now. And for the next 6 months, they can't make a dime. Why? They have a different issue they got to deal with. But once they deal with that, the money rolls in. It's all psychology. So I would encourage you to remember that what we're talking about tonight with the Pro Traders Toolbox is an attempt to try to isolate that psychology when it's there, it's ready to remain the same, or when it might be changing. But your personal psychology is infinitely more important than that. The toolbox is just a tool. It's just something that gives you help. It's like if I gave you a stack of plywood and a couple of hand tools and a bag of nails, you could come up with a tool shed, you could come up with a beautiful 2-bedroom house, or you could come up with a state-of-the-art airplane. The same materials, same tools. What did you come up with? You know what I mean? So I would encourage you to remember that this particular product is designed to be a tool to help you with the underlying psychology that you have to master anyway. John says, thanks, you're welcome. Okay, anybody got another question? I just looked at the clock. This happens every time, guys. I get going and I start talking, and I'll be here all night if you guys don't stop me and slow me down. So I know you guys got other things to do. So Joe says, thanks, you're welcome. Anybody else got a minute or two they want to take, or are we good to go? I think we had a couple of people sign in late. That may have been the time difference. If you guys did, listen, don't worry about it. This has been recorded. I'll post it. Hopefully it's not too long to go on YouTube, but I'll post it within the next few hours, maybe tomorrow morning. Check the Pro Traders Toolbox page on my website, and it should be up. If it's too long for YouTube, then I'll have to post it to a different server, and that's a download only. So you'll get it. It'll say, do you want to download this file? And you'll have to say yes. So that's how that works. A couple of yeses coming in. Thanks. It was good. Todd says, any comments about Herman Cain and his effect on the markets? See, that is a great question. That's the kind of thinking that wins. Okay, let me just give you 2 minutes on this, okay? What does the average person use to make their decision when it comes to choices? Whatever's readily available, right? And right now we live in a world where you can point and click, talk to anybody on the globe, get information from anywhere, hit another button on your remote and see the television and get anything you want for 1,000 channels on your dish TV or whatever. Information overload. You are never going to get it all or see it all. You're going to have to make a point at some point where you go, that's enough. I can't deal with that. This guy, Herman Cain, laid it right out there in the past 4 weeks. Bottom line, this is my plan. Vote for me. Here's the plan. It's exceptionally more congruent to the situation and more complete and understandable. Better than Mitt Romney's 58 points. Sure as hell's better than Obama's. That guy doesn't know. Don't even get me started on that guy. Right? He has a serious, legitimate chance at winning. And if he does, in my opinion, if he does, that guy will cause a huge reevaluation, which can only mean flight to quality. People are going to be nervous and unsure, and they're going to put their money where it's safe. The more confident they believe that this guy has the answer, they'll begin moving that money to take advantage of that answer. I don't think that's going to happen until we get to about this time next year, and we're about 4 weeks away from the election. When we get to about 4 weeks away from the election, it'll be pretty clear who the front runner is, and by then, actually, the GOP would have picked their candidate. If he is the candidate, I think that'll only happen because there'll be a huge groundswell of interest in what he wants to do, and I think the fact now, guys, don't beat me up on this. I'm just telling you like I see it. the fact that he's a black man works for him in this case, because I believe that the people who voted on the race card are really disappointed in their first choice. I personally think Condoleezza Rice would have been an awesome candidate for president. Don't really think she's got the pull, because she's got two things. She's got the race card, and she's a woman, which is a tough call in political arenas. But I think this guy has got a remarkable presence. Now the problem is the average voter isn't smart enough to recognize that. So I think the next few months that show how he does in the polls relative to Romney is going to be the big thing. I think the governor from Texas, Perry, doesn't have a chance. He's not coming off in those little sound bites the way the rest of the country can work with. I think Romney does, but this guy coming out of nowhere, I think he's going to get the Tea Party vote. And I think that I really think that Palin, I think that was smart that she chose not to run, because that would divide the party, the Tea Party. I think that's smart. She might end up as his running mate, But in my opinion, I think that the guy's got a real fighting chance, and I think what makes him a fighting chance is that he surprised everybody with how simple the plan is. If he can get the people who vote because of race, and I'm not saying that because it's negative, I'm just saying that's the way it is, I'm not being a racist. I'm just saying the people who vote because of race, if they can see that this guy is a better choice than the last guy they voted for that reason, he's going to gain another 5 to 8% in the polls, and that's enough to win an election in this country. It'll be interesting to see who supports him in the next 6 months. If he gets support from guys like Don Trump, that would be a big thing. I think he's got what it takes because he's a businessman. He's had to meet a payroll. He's had to figure out how to cut costs. But then again, that's me. I think differently than most people, and I don't know if the average public is going to get it. But if they do, I think he's got a real strong chance at winning, in my opinion. Peter says, enlightening. There you go. I don't know if we could vote for a guy named Herman, though. What do you think? Todd says, do you think the 999 plan can actually work? Well, I think the important issue is not whether or not the plan has potential. I think the issue is whether or not the people will support the plan, pass the laws, and then enforce them. See, the problem isn't plan. If you look back in history, the idea of a flat tax, flat tax on the public. This is it. You make more than $12,000 a year, you pay 9% bottom line. That's it. First of all, that's going to eliminate 100,000 jobs, hundreds of thousands of jobs from the IRS. It's going to put most accountants out of business. So it's a great idea, and it makes it really easy for you and I to pay our taxes, right? And more people will pay their taxes. More people will pay their taxes if it's not the government, reaching into their wallet and taking 40% of what they make. More people. See, this is the thing people don't get. It blows my mind. Whenever you cut tax rates, revenues from taxes go up. You want to meet a tax objective for income? Cut the rate. More people pay their taxes. It's a great idea. But look at the other side of that. The people who suffer because of the cure will try to put it out of business, right? What's good for the country? Well, that's good for the country, and it makes everything happy for everyone, but I'm going to lose my job, right? Arthur Anderson is going to fire me because they don't need me and 16 other people to manage the books at ABC Company over here anymore, because it's real simple. They pay 9%. So you're out of a job. Well, that's going to be the sticking point, right? So it's not whether or not it's a good idea and it would be great for the country. It's whether or not the public has the wherewithal to enforce it, It's like it's real simple to pass a law. Everybody should have a fire extinguisher. But it takes your whole block burning down and you losing everything before you go, yeah, gee, I should have put that $50 piece of equipment in my house. Gee, I'm really sorry about that, guys. You know what I mean? It's it's great to have good things proposed and argued, but it really boils down to whether or not people will accept it and enforce it. I think the Republicans would be behind it because I think that's what they want. They know that something has to change. But I think the Democrats and the public might really, really suffer, and that would be an issue, I think. Peter says, Herman sounds better than Barack. Yeah, well, I think you're right. I mean, I was never a fan of Barack Obama. I actually didn't think he'd finish his first term. I thought he'd either be forced from office in scandal or he'd be assassinated. That's what I thought. Looks like he's not going to get, reelected, so, the public's going to fire him. But, I'm just saying, I didn't think he was qualified to begin with, and as it turned out, I think the rest of the world's beginning to see that that's probably the case. So I don't think he has a chance of being reelected. I think no matter who runs against him, they'll probably be elected. Hopefully it'll be somebody with a real plan and the vision and the ability to enforce it. Anyway, Todd says, a 9% sales tax, isn't that a socialist initiative like Europe or Canada? Yeah, well, ask them what they think about their economies right now. Ask them what they think. Seriously, ask them what they think. The issue is not what's perfect, but what's best. You look at Canada with all the problems they have, they're doing exceptionally better than the U.S. is at this point, right? Europe, they got a lot of problems, but if the framers of the European Union and the creators of the euro would have foreseen the fact that there will be drags on the unified financial system, they could have stopped or headed off the issue that Italy, Greece, Portugal, and Ireland have created. They could have done that. Not enough foresight. But it's a better system than they had before, and their ability to perform is better. There's a reason why China is pumping all kinds of money into the Eurozone and not really doing that in the U.S. right now, right? There's a reason why that is. Canada has tremendous amount of natural resources, and they're pulling out the stops to create it. They're, okay, let's go to work. The money's starting to flow in there. Who's their biggest consumer? We are. So, ask them. Oh, well, okay, socialized medicine. All right, well, it doesn't really work that well. Everything else seems to be doing okay. And in terms of economic downturn and catastrophe, Canada seems to have been able to keep the ball together a little better than the Europeans, but the Europeans are positioned to come out of this whole thing much better than the U.S. ever will. So, in my opinion, it's not a perfect solution, but it's better than what we're doing with. What the hell's wrong with this country? We get, I don't want to get started on that. I'll lose friends and family and customers if I do. Peter says, big business doesn't trust Obama. Yeah, I think that's true, but at the same token, the reason they don't trust him, I don't think is because of his policies. The reason they don't trust him is because he doesn't listen when they say, wait a minute, that's going too far, right? That's the problem. Where's the happy medium, right? President Obama doesn't seem to understand that. He's a globalist and an elitist, and he really thinks he accomplished something. That's what makes that guy dangerous. He really thinks and believes his own BS. Because of that, as long as he's in office, he's ineffective. When you bring to the table and you say, look, hey, Barry, this doesn't really work. Here's what we need to do different. He's got 22 guys on his staff that are in between you and him, and they're all nodding yes to him and no to the idea, right? Then when he moderates and he backpedals, it appears to me that what he's doing is adopting conservative ideas. He's saying, okay, we'll go ahead and repeal this, and we'll cut the tax rate here, and we'll extend the Bush tax cuts or whatever. No new taxes right now, but I'm only doing that because in my opinion, I don't really think that his problem isn't that the problem is he doesn't listen. He doesn't really believe that somebody other than him has an answer or a solution. Did you know that on his entire cabinet, there's not one guy on that cabinet that's ever run a company or held a job or had to meet a payroll? None of those guys have ever done that, right? The guy he appointed, the chairman of the board for GE, he appointed this guy to be job czar, right? What's GE doing? Investing billions of dollars in China and exporting hundreds of thousands of jobs outside the U.S. And this is the guy that's going to be the job czar? Now, I'm not saying that the chairman at GE is a dumb guy. What I'm saying is, hey, Barry, how come, if you're going to appoint a guy whose job it is to create jobs within the borders of the U.S., why are you hiring a guy who's exporting jobs, right? Why are you giving $500 million to a company, this is the Solera guys, that goes bankrupt 6 months later? Never once asked them, well, wait a minute, your cost of business is 30% over market. How are you guys going to make a dime if I give you $500,000? You know what I'm saying? The guy doesn't get it. And all his cabinet doesn't get it. They don't have they've never gone without a meal. This guy, they've never had to suffer in order to make success happen for themselves, so they can't possibly understand the true nature of the conflict. Todd says, well, he did get the Nobel Prize, didn't he? Yeah. Oh, you want to tell me what, you know what the public thinks of that? Let me tell you what I saw down here. I just moved to Miami, right? And I had 2 doctor's orders. Boy, it doesn't suck, right? Driving by one of these, mom and pop hamburger stands. You know what it said out front? Supersize it. Right? If you order big fries, free Nobel Prize. Hey, what does that tell you? Harry says, who do you think's better qualified than President Chairman of GE? Oh, I don't know. Anybody asked, well, you want me to just pick a few names? Who's the guy that ran Chrysler? How come nobody asked that guy? Right? Too late to ask Steve Jobs. Bet he would have made a big difference. See, Lee Iacocca would have been a perfect guy for that position. Nobody wanted to hire him because the first thing he said was, you're doing the wrong things to begin with. You got to stop all this other bullshit, and then we can create jobs. Well, nobody wants to hear that in the Oval Office. See? Peter says, too little, too late now. Yeah, I agree. Todd says, Barry really was a constitutional law professor at Chicago. No, he wasn't. He wasn't a constitutional law professor at University of Chicago. This is where you got to really be skeptical of what the media tells you and do your own homework. He wasn't. He was a teacher's aide who taught when the teacher wasn't available. He wasn't a constitutional law professor. He was a stand-in for a guy that was doing freshman level stuff. You didn't need a professor for that guy. Oh, God, don't get me started on Obama. The guy's biggest fraud ever perpetrated on this country, in my opinion. Anyway, Harry says, Lee Iacocca is retired and in poor health. Steve Jobs is dead. Who else? All right, okay. Nobody's asking me to run the Fed. Nobody's asking me to run for office. You think my point of view might have something of value? Why don't you find somebody that's thinking the same way that has the quality and credentials that you might think would be valuable? Who would that be? Don Trump? Oh, no, he's an egomaniac. Okay, right. Well, he's come back from the dead twice as a billionaire. He might know how to cut 5% out of the budget and balance things, right? Ben Bernanke? Okay, why don't we find somebody that's read history before we put somebody in charge of running the press? The printing press for money, right? It's not a leap of faith. There's hundreds of people, thousands of people out there that could do a better job. Seriously. And you could be one of them. But will you get elected, and will you be able to get on the staff, and will you be able to put your 2 cents in? right? Because I don't believe our government is structured anymore to listen to the people, and that's the big problem. Used to be under Truman, that's one. Under Truman, who can we get to help? That guy sat in the Oval Office and made phone calls and asked people to help. When the car companies were going under, the first thing I would have done is call Lee Iacocca and say, look, I know you're kind of dying right now, but who would you recommend? How do we get out of this mess? Well, the first thing you need to do, Mr. President, is resign, because you don't have a clue. Well, that's not going to happen. Well, so I guess Lee's out. See what I mean? They're not. There's all kinds of people out there that would be better qualified, right? That's just my opinion. Who's the chief executive officer at Walmart? Think that guy knows anything about creating jobs? Think he could get him to work for $1 a year? Run Congress? Hire jobs? What do you think? Create jobs? Think you can get him to do it? See, there's a reason why people in government are in government and people in business are in business, because government doesn't pay. That's why. The best people are out there making it happen. The smartest thing our government could do on any level is stop getting in the way of people who make things happen. It's get out of the way. Let them do what they know how to do and tax them at 9%. Now, what you do with that tax money is up to you, but get out of the way. See what I'm saying? They're not set up for that anymore. That's just my view. And again, I lose friends, family, and customers every time I get on my white soapbox, so I think you guys have probably had an earful tonight. Hope you come back. Anyway, I'll let you guys go. I just looked at the clock again, and you let me do it. You let me go way off time and the rest of it. I'm going to get all kinds of problems in the next couple of weeks from people reading and listening to this. Not blaming you, but it's my fault. All right, here's what we're going to do. I'm going to go ahead and get off the air, let you guys get to your evening. Thank you for coming. It's my pleasure to work with you. Feel free to consider an open door. Feel free to consider me your friend in the business. And if I can ever help, feel free to get in touch with me anytime. And hopefully you'll take another serious look at the Toolbox. I'll be doing the training on the Toolbox again next month. You don't have to wait that long. If you want to come to any of my morning briefings, just sign up. I'll give you a couple of days access, send you a prorated bill for the month if you want to keep coming. Maybe you'll want to go ahead and consider me a regular stop on your daily trading. Also, I have lots of free content on my website and lots of free webinars that I do all the time. You're welcome to come to any of it. All you got to do is get on my mailing list, get on my email list, and I'll be happy to let you know. I promise I won't resell the list. I never do, and I don't spam you because I don't have time for that. Anything I send out has to do with me trying to help you. So all you have to do is delete it if you're not interested, but stay on the mailing list. I think you'll like what you see over time. Don't forget this Friday at noon, I'm doing a broadcast with Trader's Log, the top 5 driving fundamentals of Forex. You're welcome to come. That'll be recorded as well. I think the owner of that site, Dan Blystone in Chicago, is going to record it. So you'll have to probably get the recording from him. I don't know exactly how that works. But I will be there to do the broadcast at noon. You can sign up on my site. I've got the link at the bottom of my homepage. Okay, guys, listen, thanks again. It's a wonderful experience. As always, I learn something every time, and I hope you did too. We'll see you at the next one. In between now and then, good luck and good trading. Don't forget to run your stops, guys. I'll see you. Thanks.